So today is November 5th, 2017. I'm scanning the markets looking for some trades. Um, but right now, what I want to do is show, just for educational purposes of using the Bollinger Bands again, I want to show some false breaks and how the bands, usually works. They're nothing's 100% correct all the time, but they do have high probabilities. But what I want to show people is when you have a pierce of the band and it starts off, sorry about that. So what I noticed that for before prices can turn into a trend, it either starts off as a counter trend, and then it starts trending. So it has to get to a point. So it has to get to a point where it gives you some type of signal that it's not a counter trend trade. So it starts off. So what I'm saying is here from here to here signals a uptrend. But let's just say from here to here is an uptrend. But you have to have to consider a downtrend. You have to have some type of signal. So, or to try to catch a reversal trade, the counter trend has to have some type of signal or break or price action that's going to signal that it's no longer a counter trend trade. So meaning from here to here is a counter trend trade from the uptrend. This is a counter trend. This as well can be considered a counter trend trade, and it stopped becoming and then as you see it turned up. Well, what I'm saying is starting over. From here to here is an uptrend. From here to here is an uptrend. From here to here is a counter trend. But it went back up here and it broke this swing low to form a downtrend. This is a downtrend. And then it still didn't, if I'm correct, it probably didn't break the 61. And you see it came down to the 61, but it didn't close. So that's still signal that it was still uptrend. It still was having buyers in this uptrend looking just to get to that point. Probably if I go down to the daily chart, it will show some type of support or some demand in that area. But it went back up to here. So from here to here is a counter trend. From here to here is a counter trend. Even though we had a band break in sidebar, see in sidebar, it broke to the low, which signals a downtrend. But if you would have did a market execution or a buy on stop underneath the mother bar, you would have. It depends on where you set your stop loss at. I don't know if you would have took the whole thing and set your stop loss above the bar, but you would have had a loss here. But look how it came back up to here, and it then formed the reversal. So after it broke right here, from this low and broke it here, but with that close, that's when it confirmed that this is a downtrend. So even though we had a buy here for that week, that was just price doing a retest or counter trend or a retrace to confirm to keep going down. Now we don't know how far this downtrend can go. It can go all the way back down to here. It can go all the way back down to here. We don't know. It could go back into this zone. The reason why I say this one is because this was a inside bar. I'm just using a price action as zone. This was a zone. I'm just using price action as a zone. It's that mother bar. So you see it's coming down into there. So it depends on if we get some type of signal some type of buyers coming back into the market. But right now it's still signaling a sell on the AudUsd. And this is a weekly chart. What we can also do is plot a Fibonacci. We can do a Fibonacci from here to here. And we'll see, as you see, that's the 61. So if we get some type of price action at that 61, then we're going to go continue going, start going back up. If we get a break below, then it's going to signal more of a downtrend. You can also take this Fibonacci, and you can technically say that this is the start of the downtrend, and that prices has to reach down here to give some type of confirmation or signal for the uptrend. Now, I know a lot of people wonder, like, so what do you do? Well, what I would do is just have an alert at those areas. So what I would do is set an alert here. Where's your alert at? I should give a sec. Let me delete the fib, see if I can do it. Oh, there's the alert. So let me put that fib back on there. What I'll do is set an alert here. Go to trading and hit alert. And then what I'll do is go here. I'll go to trading. And set an alert. And just wait from there. Or as you know, we'll still come back at the end of the day and still always look for price action. And as we see, look at the 61, it lines up with our zone anyway. So we know, even if we just did here, if you did here, here, and here, just to see which one would be the low to confirm our buying, when buyers might potentially come back into the market. As you see, that 61 lined up with the top of our demand zone. So I use that. So I use all 3 points just to give me some type of confirmation. Let me see if my alert's set. Go down here and see alerts. And it's AudUsd. Yeah. Alert. I'm just alert. Sound source alert. Look. For a signal for buyers. So I set that alert sound. Maybe I'll go to notification. So it can send this to my cell phone. Look for I sent the test. See if that test is going to see if it sends it to my cell phone. Yeah, sent to my cell phone. I'm gonna do the same thing here. Look for Okay, so that's how we did that weekly. That's a weekly chart. Now, get rid of that. That's if you're looking for some long positions. But what we can do right now is analyze this for some intraday trades. And as well as I said, as I wanted to show how, even though the bands broke and it seemed like it didn't work here, all you do is look for another signal, price action signal of that zone to confirm another entry. So if it doesn't uh, work the first time, always look for it. Be very wary, wary or watchful of it to know that even though it's going to continue the uptrend, it's in the area of reversal. It's going to reverse, even if it was a downtrend, as you see right here. What I'm saying down here, pierced the band, but it didn't. It didn't. It didn't continue. It didn't signal a buy automatically. You would have bought it, and you would have been in a winning situation. If you did a market entry, you'd been in a winning situation for 2 weeks, maybe 3 weeks. But then it wouldn't have been if you would have did your risk to ratio money management, you probably wouldn't have gotten your 2 to 1 or 3 to 1, whatever you go for. You probably wouldn't have got that until it came down to here. So that's what I want to show, and it shows divergence too. Lower low, lower low, but as you down here, the momentum showing that it's momentum going higher. That's divergence. Same thing with here. Higher high, higher high, lower, lower. That's divergence. It's all on the weekly. It's giving you it right there. And the reason why I got this other black line here is to show you supply and demand. It really never fails. So as you see, I plotted this line so you can see all this. I plotted this line based off of the high of this bar. And then I just plotted the line above that high. And as you see, that was an area of supply. But really, so that means that's been tested. So the next area would be from here to here. Because now this is fresh. And that would be this. That would be that candle. Even though you could have took the entire candle and plotted your zone. As you see, that's your true zone. And usually if you look for dojis, pin bars, whatever, in the current trend, you will always see some type of price action lining up with it. So be very mindful of that. Even like sometimes it failed, but as you see, it's still a key area. This failed, signaling a downtrend, but as it came over here, it still signaled another downtrend, and then finally gave away and gave a false break, and then formed the downtrend. So always be watchful of it. If it doesn't work the first time, try it again. If it doesn't work that time, try it again. That's the point of trading. Trading is not to look for the best setup and try to only take it one time. It's taking it every time that you can with proper money management, and then getting your potential full. Look at that, your full trade. That would have been more than a 2 to 1 risk reward. And this is all off of weekly charts. Same thing goes to the daily chart. So looking at the daily, like I said, we're in the area of demand. Right now we have an inside bar. So either you would possibly put a sell on stop underneath the mother bar, because this could be confirmed flag. It's also a bearish pin bar, even though it doesn't have the arrow on it. The reason why it doesn't have my arrow, the indicator that I programmed, that I wrote the code for, is because maybe this body is not 25% of the entire wick. Maybe it's like 30%, so it probably didn't put the arrow up there. Same thing with these. The wick, the body of it is maybe not 30%, of the entire wick to give a strong pin bar for me. So let's just see if there's some type of price action signal showing us demand. And as you see, what I feel like is going to happen, you got your pin bar here. This is your pin bar. You're buying. But it didn't go here. What I feel like is going to happen is it's going to form divergence. It broke the band. What I feel like is going to happen, you see this engulfing candle here, which lines up with this pin bar here. That's all an area of demand.
You too. I'm sorry I can't hear you. My phone's beeping. Somebody beeping in home. It's good talking to you. That was beeping.
So that's where we're looking to get in at right now. As we see, we made a low on the CCI. I feel like it's going to come up and it's going to drop down to that area. It possibly could drop down to here, and that's why I'm not very biased. So what I'll do is here, I'm just using these as daily support. It could drop down here because this was a key area. It's not a full pin bar, but it's not a doji where it's showing like a very cross, meaning when I say doji or something that's so pin bars and inverted hammers are your best signal for entries. Decision areas is your dojis or cross when you have a bar that forms like this. Let me see if I got one on the weekly just so I can give a good example. Oh, pretty much how I said this one was, and this one as well. I like to see these. I like to call them crosses. You know, you have your inverted cross and your cross. You know, this was an inverted cross where the close was very close to the bottom, signaling down. Then you have your cross where the close would be high, which would be like this. So it's like Jesus, the devil right here. That's just an analogy or metaphor you can think about when you're thinking about crosses or decision areas. So this, what I'm saying is this is an area of decision. You see you got a cross here showing sellers pushing price down. So now that area then became, as we see, if I put it here, if I put it on the close, that closed bar, as you see, look at that. How price came up to here, used it as a resistance. It dropped down, but then it broke it, came back up. So these three lines that I'm plotting on here they're not zones. I'm not going to use them as zones because I don't want to clutter my chart, but I'm going to use them as support areas. I'm looking for a trade entry. So that's the analysis for the Aussie USD.